Imagine turning your hard-earned money into a fortune. Sounds exciting, doesn't it? Welcome to the world of the share market. This bustling, dynamic marketplace is where companies and investors come together, where dreams can flourish or flounder, and where fortunes are made. So what exactly is the share market? Think of it as a grand bazaar where companies sell pieces of themselves in the form of shares. When you buy a share, you're buying a piece of that company. You're putting your money behind their vision, their products, their services. You're staking a claim in their future success. Why is this important for your financial growth? Well, when a company makes a profit, they might choose to share a portion of it with their shareholders. This payment is known as a dividend. But that's not the only way to make money here. If the company's value grows over time, the price of your shares could rise as well. This increase is called a capital gain. But remember, the share market isn't just about making money, it's also about funding innovation, driving economic growth, and creating jobs. It's a vital cog in the machinery of our economy. Now, the share market can seem daunting at first. It's a world filled with strange jargon and complex concepts. But don't worry. It's not as complicated as it seems, and the potential rewards make it worth the effort to understand. So let's start our journey with a simple truth. The share market is not a casino. It's not about betting or taking wild chances. It's about investing wisely, patiently, and strategically. It's about understanding the companies you invest in, about knowing their strengths and weaknesses, their potential for growth. So do you now understand why the share market could be your pathway to financial success? It's a place where you can grow your wealth, secure your future, and maybe even make a difference in the world. And we're here to guide you every step of the way. Have you ever planned a journey without a destination? Investing is no different. It's essential to know where you're heading financially and why. This is where setting clear, achievable investment goals comes into play. Think of these goals as the roadmap for your investing journey. They provide direction, helping you make informed decisions about where to put your money. Whether you're investing for retirement, a child's education, or that dream vacation, having a well-defined goal can guide your investment choices. It can help determine how much risk you're willing to take and the investment horizon you're comfortable with. Remember, the more specific your goals, the better. Instead of saying, I want to be rich, try, I want to save $200,000 for a down payment on a house in 10 years. With your goals set, are you ready to dive into the world of stocks? Ever wondered how some investors always seem to pick the winning stocks? Well, it's not all about luck. It's about having the right strategies and understanding the market trends. So, how do you choose the right stocks? Firstly, you need to do your homework. Research is your best friend in the share market. There's no shortcut to understanding a company's financial health, its competitive position, and the industry it operates in. Look at the company's earnings reports, read news articles, and listen to earnings calls. This will give you a clear picture of the company's performance and its prospects. Secondly, you need to understand the market trends. The stock market is like a giant wave. Sometimes it's up, sometimes it's down. But if you can ride the wave and understand its patterns, you can make smart investment decisions. Keep an eye on economic indicators, industry trends, and market sentiment. These will give you a sense of where the market is heading. But remember, not all stocks are created equal. Some stocks are like slow and steady tortoises, providing consistent returns over time. These are often large, established companies that are leaders in their industries. On the other hand, some stocks are like hares, darting up and down with the market's mood. These are often smaller, riskier companies that can provide high returns, but also carry high risks. So, how do you decide between the tortoise and the hare? That depends on your investment goals and your risk tolerance. If you're saving for retirement and you have a long time horizon, you might prefer the steady returns of the tortoise. But if you're looking for quick gains and you're comfortable with risk, you might prefer the excitement of the hare. Choosing the right stocks is more of an art than a science. It involves a delicate balance between research, understanding market trends, and aligning with your investment goals. But with patience and practice, you can become an expert at this art. Think you can spot the next big winner in the market now? Does the thought of losing your investment scare you? Let's conquer that fear. It's time to master the art of risk management, a skill as crucial as choosing the right stocks. While investing in the share market can be a roller coaster ride, knowing how to manage risks can turn this ride into a more predictable journey. Risk management begins with understanding your investment comfort zone. Are you a risk taker ready to invest in high-risk, high-return shares? Or are you more conservative, preferring stable, low-risk investments? Knowing where you stand can help you make informed decisions that align with your financial goals and risk tolerance. Now, let's talk about diversification, one of the most effective risk management techniques. It involves spreading your investments across various sectors, industries, and geographical locations. By not putting all your eggs in one basket, you can cushion the impact of a poor-performing investment, so if one sector or company takes a hit, your entire portfolio doesn't have to suffer. Another strategy is asset allocation. This is how you divide your investments between different asset classes like stocks, bonds, and cash. Each asset class comes with its own level of risk and return potential. By adjusting the proportion of each asset in your portfolio, you can manage the overall risk. Let's not forget the power of research. Staying informed about market trends, company performance, and economic indicators can help you anticipate potential risks and take timely action. Remember, knowledge is power, especially when it comes to investing. Finally, consider seeking professional advice. Financial advisors can provide personalized strategies and insights that align with your financial goals and risk tolerance. They can help navigate the complex world of investing and guide you through tough decisions. Feeling more confident about managing risks in the share market? With these techniques and a clear understanding of your financial goals, you can take calculated risks, reduce potential losses, and increase your chances of achieving investment success. Remember, risk management isn't about avoiding risks altogether, it's about understanding and controlling them to your advantage. Want to know a secret strategy used by successful investors? It's called diversification, and it's a winning game plan for your wealth. So, what is diversification? Essentially, it's about not putting all your eggs in one basket. It's about spreading out your investments across different types of assets like stocks, bonds, and real estate, each having its own risk and reward potential. Here's why it's a smart move. If one investment takes a hit, others might perform well, balancing out your losses. That's the beauty of diversification. It reduces risk and can increase potential returns. It's like a safety net for your hard-earned money. Now, diversifying doesn't mean randomly picking investments. It's about strategically choosing a mix that aligns with your goals and risk tolerance. And remember, diversification isn't a one-time act, it's an ongoing process. You'll need to revisit and adjust your portfolio as market conditions and your goals change. Ready to build your diverse portfolio? Are you ready to make your money work harder for you? Excellent! Let's delve into the final frontier of our journey, maximizing returns on your investments. So, how can you squeeze every last drop of potential from your hard-earned money? Well, one of the most effective strategies is reinvesting dividends. When a company you've invested in makes a profit, they might distribute a portion of this profit to their shareholders in the form of dividends. Instead of spending these dividends, consider reinvesting them back into the market. This can supercharge your wealth growth through the power of compound interest. It's like a snowball rolling down a hill, growing bigger and faster with every turn. Now let's talk about another crucial strategy, long-term investing. The stock market can be volatile in the short term, with prices fluctuating daily. But over the long haul, the general trend of the market has historically been upwards. By investing for the long term, you give your money the opportunity to grow and compound. In other words, patience truly is a virtue when it comes to investing. Also, don't forget about the importance of continuous learning. The investment world is ever evolving, with new trends and opportunities emerging all the time. Stay informed about market trends, economic indicators, and company performance. This knowledge will empower you to make savvy investment decisions that can maximize your returns. And finally, remember that maximizing returns isn't just about making more money. It's also about making smart decisions that align with your investment goals and risk tolerance. There's no one-size-fits-all strategy here. It's about finding the approach that works best for you and your unique financial situation. Now that you know the secrets of maximizing returns, are you ready to conquer the share market? With these strategies under your belt, you're well equipped to navigate the exciting world of investing. Remember, the journey to financial freedom isn't a sprint, but a marathon. So take a deep breath, stay focused, and let your money do the hard work for you. Congratulations, you've just taken a big step towards financial freedom. We've journeyed from understanding the share market's basics, setting clear investment goals, selecting the right stocks, mastering risk management, building a diverse portfolio, to strategies for maximizing returns. Now, it's time to apply this knowledge to your financial journey. Remember, the road to wealth is paved with smart investing and savvy saving. Don't forget to like, comment, and subscribe for more tips from Simple Saving Squad. Invest smart, save smarter.